Welcome back to the entry-level trading course by Valetax. I am your educator for this course, Ryan Ifere. This is episode 8, and on this episode, we're going to be talking about entries, stop loss, and take profit, which are very key and tantamount parts of trading. Because at the end of the day, the entries we make would result to the profits we make or the capital we lose in the market. What makes a trade a trade? A complete trade has three components, three major components: an entry, a stop loss, and a take profit. A trade isn't just a buy or a sell order, it's a total involvement of the participant in his trade entry and his management. So every proper trade must have an entry first of all, has a stop loss, and have a take profit. Entry is where you enter the trade from, is where you decide to want to make entry into the market, deciding that you have analyzed the market and you're either saying the market is going to move upwards or the market is going to move downwards. Then a stop loss defines your risk, what amount of your capital you're willing to let go of if eventually you are wrong or prices do not move in your direction, or for some reason the market and price manipulation kind of happens. Take profit defines your target. What exactly are you wanting to make from this trade? What is your capital growth going to look like? What does your risk to reward at the end of the day matter? So are you going to be risking a 1:2 or a 1:3? So risking a portion one of your account for three portions. Size matters in your account. Okay, so here is the entry logic. Entry is supposed to tell you where and why. Okay, an entry must have a reasoning. It must tell you why exactly are you deciding to make this trade and why do you want to enter at this position? Not just emotion, not just I think that I want to buy or I want to sell here. You should have a technical bias and most likely a fundamental attachment to it. It shouldn't just be pure sentiment, but it should have structure that relates to why you're wanting to take a trade. So common entry reasons for a lot of technical traders would be a support or resistance, a break and a retest, or a trend continuation, meaning that you're going in line with the market structure, you're respecting the candlestick price actions, and you have a full-blown confluence to why you're making an entry. The next thing is your stop loss. A stop loss is a predefined loss point, is where you have thought about and you've looked through your technical analysis and have said, if prices eventually do come to this point, I am wrong and I would be no longer interested in wanting to stay in this trade. Now, what it does is it protects your capital and your emotion. A stop loss does not necessarily mean that you're wrong every time. Sometimes it's about being disciplined and capital preservation, because your first goal as a trader is a capital preservation, is your ability to manage your capital effectively and efficiently. And that is what a stop loss does for you. The proper way to set a stop loss usually would be in validation points. The next thing we want to pay attention to is the take profit as a planned exit. Okay, and why is that? Because a planned exit allows you to not stay in the market too long and allows you to know where the market is becoming exhausted. So your take profit should align with your structural previous highs and previous lows. This way, you know that if prices get to a certain point, I am saying that this is where I'm getting out of the market. And why we say it should align with previous highs or previous lows is because these are areas where markets, tend to get to a halt, a ceiling, or a bottom. A resistance would probably hold prices from breaking above and could return prices back to hit your entry or your stop loss. And also for a support level too as well. So it's important to set take profits right before these levels so that you know that you have profits taken, not profits hoped for. Another key part of when it comes to these three things is what we refer to as a break even, which is also a risk management mechanism where you move your stop loss into the entry point to hold prices safer. So you're in no opportunity to lose whatsoever. Now, why every trade must have all three things? A trade without an SL could probably just be an emotional trade, and an entry without TP is probably just fear-based trading, meaning that you're just trading and you're trying to trade with the vibe. And when you're trading emotionally, it's because you're scared and you do not know exactly what the reasoning behind your trade is. That is why you most likely don't have a TP or an SL. Structure and structured trades create consistency, confidence, and longevity. So you do not want to expose your account to complete risk, especially when it is your personal capital or liquidity in the market. And we've come to the end of this episode, and I hope you understand why it's important to take profits at highs or lows. If you do not understand, please refer back to the previous episode to understand how support and resistance and structure are important to your trading, and you would have a full idea. Remember, this is just the beginner opportunity for you to understand how trading works. When we move into the next trading level course, where we do a lot of chat works, all of these things will become better and you can see them and it will make more sense and become easier for you towards your intermediate journey as a Forex trader. I'll see you on the next episode.